Investing in stocks is like driving your own car. You are in control, you choose the direction, you choose the speed, but you must know how to drive and also know how to pay attention to the road. Mutual funds, on the other hand, is like entering into a bus. So there's a professional driver that drives the bus. You simply need to sit back while someone that is experienced manages the journey for you. Both of them can actually get you to the destination. However, the experience is different. So last week, a young man reached out to me and he was like, "Oh, I have 100,000 naira and I want to invest this money." And then he asked me, he was like, "So what should I do? Should I invest this money in stocks or should I invest in mutual funds?" And to be candid, this is one question that comes out every single time someone new is coming into their investment journey. Because for most people, whenever they want to start learning about investment, these two usually comes up and they are always confused on whether to buy stocks or to buy mutual funds. Both of them promise growth, both of them promise wealth, but which one should you actually start with? So the thing is, both of them actually work differently. And today in this video, trust your girl now, I'm going to be breaking them down for you in simple terms. And I'm also going to be showing you how you can invest in each one of them. And most importantly, you are going to be understanding which one is actually better for you. Hi everyone, welcome back to my channel. My name is Adeshola. You can call me Shows. I'm an economist, an investment analyst, and a chartered stockbroker. On this channel, we talk about everything investing and personal finance. If this is the first time here, I want to say a very big welcome to you. And if you have been following up with this channel, I want to say a very big thank you. Thank you so much for your support. Your support means a whole lot to me. Please, if you've been watching and you find my content helpful and you are yet to subscribe to my channel, what are you waiting for? Please kindly hit that subscribe button and press that notification bell so that you always get notified whenever I upload new videos. So before we go right into the stocks and the mutual funds, let us imagine something. Let us imagine that you save 10,000 naira every month for a whole year. At the end of the year, you are able to save 120,000 naira. That might sound great and that might sound good to you. But here is actually the problem. The cost of things keep rising. Food becomes more expensive, transport becomes more expensive, housing becomes more expensive, and that 120,000 naira that you have saved is not able to buy the same thing it was able to buy 1 year ago. And that is why investment is very important. So when you invest, your money is not just sitting idle, your money is working for you as hard as you do. And two most popular ways which people actually make their money work for them is through stocks and mutual funds, but they work differently. So now let's talk about stocks. So when you invest in stocks, you are actually buying a part ownership of a company. And do you know the beautiful part of investing in stocks? These stocks or these companies are actually companies that you can relate with. Yes, you buy data, you use their products, you use their services. However, you can also become a part owner of their business. So instead of just using them, you can also become a shareholder in these companies and also get paid by them. That sounds interesting, right? So when you buy stocks, there are two major ways you can make money when you buy stocks. The first one is capital appreciation. So capital appreciation comes in the form of an instance where you buy a particular share for say 100 naira and that share appreciates to say 150 naira. So that means that the margin, the difference between how much it is currently or the value of the stock currently and how much you bought it is what you have gained. And in this case, it is 50 naira per share. So you are going to multiply this 50 naira per share by the number of units that you have, and then that becomes the value you have gained. Another way you can make money when you invest in shares is through dividend payments. So sometimes whenever these companies make profits in a year, they distribute a part of that profit to their shareholders, and then as a shareholder, you get paid. So one thing that keeps popping up whenever people want to start investing in stocks is, So how do I know which one to buy? So for you to choose the right stock, it is always better for you to understand the industry you are putting your money into, understand the sector, check the track record of these companies. Have they been making profit over the years? You also need to check if these companies have actually been paying their shareholders dividends, especially when you are interested in dividend payment. Another key thing is for you to check the company's fundamentals. Most importantly, when you want to invest in shares, it is always good for you to try as much as possible to diversify your portfolio. So don't just put all your eggs in one basket. Don't just put all your money into one particular stock or into one particular industry. Try as much as possible to diversify your investment into different sectors. So for example, in Nigeria, we have the oil and gas sector. Here you find the likes of Aradel, you find the likes of Seplat. We have the industrial goods sector. Here you find the likes of Dangote Cement, you find the likes of Boa Cement. We have the likes of consumer goods sector, where you find the likes of Nestle, Cadbury. We also have the banking sector, where you'll find the likes of Access Bank, Zenith, GT Bank, UBA, First Bank, and the likes of them. So one key thing you need to understand about investing in stocks is that stocks are volatile. Yes, when you buy a particular stock today, by the time you check back tomorrow, the price might have gone up or it might have gone down. But one way to actually win whenever it comes to investing in stocks is to have a long-term mentality. Yes, is to actually have the goal or the objective of leaving it for a long time. By then, over time, you are going to make good profit from it, especially when you invest in fundamentally good stocks. And that is why it is always very important that you do your research very well. You do your proper due diligence on any stock you want to put your money into. You check for the industries, you check for their profits, you check for their dividend history. You try as much as possible to understand their financial performance. And for many beginners, this can actually be quite overwhelming. And that is where mutual fund comes in. So I have a full video where I talked about how to invest in stocks in Nigeria. I also have a video on how to invest in foreign stocks. Simply go right into the description and you are going to see the videos right there. And I didn't just talk about them, I actually demonstrated to you and I actually guided on step by step on how to go about investing in them. So make sure that you go right into the description and check those videos out. So now let's go right into mutual funds. Mutual funds is more like a pooled investment. So here, instead of buying just one particular investment, you own many pieces of investment and then a professional manager helps you manage the fund. So there are different types of mutual funds. We have the equity mutual funds. So for most times, 70% or more of the assets that you have in the equity mutual fund is usually invested in stocks. Yes, and these stocks are actually well diversified. And the remaining 30% can be invested into fixed income instruments. So there is also the money market mutual fund. Yes, so the money market fund usually invests in short-term instruments. So short-term instruments like treasury bills, like commercial papers, like fixed deposits. So most of the investments that you have here are usually invested into short-term instruments. So there are also the fixed income mutual fund, there is the balanced mutual fund, there is also the dollar mutual funds. Yes, we have dollar mutual funds that are invested in foreign assets. And in fact, if you are someone that is interested in putting your money into ethical funds or Sharia compliance instruments, there are also investments that are specifically designed for that. So mutual fund is more like investing your money and then you going to sleep, because a professional manager helps you manage the fund. So one key benefit about investing in mutual fund is diversification. So instead of you just putting your money into one particular investment or one particular asset, your money is diversified across different assets, all depending on the type of mutual fund that you put your money into. And this ensures that you don't just put all your eggs in one basket. So in Nigeria, there are different platforms of investment managers or asset managers that you can actually use. You know, we have the Stanbic IBTC asset management, we have the ARM investment managers, we have the Chapel Hill Denham, we have the likes of United Capital Asset Management, we have the likes of AfriInvest Asset Management, and a whole lot of others that offer services that can actually give you the opportunity to invest in different types of mutual funds. And it all depends on your preference. So on this channel, I actually have a particular video where I demonstrated to you step by step on how to invest in the Stanbic IBTC mutual fund. All you need to do is simply check the description, and on that video I actually demonstrated to you step by step how you can do it yourself. I've also dropped a link where you can actually just click on the link and sign up directly into the Stanbic IBTC mutual fund. So one key difference you may want to find in investing in both the stock market and the mutual fund is the fact that stocks can actually offer you higher growth potential. Yes, especially when you have a long-term objective for investing in stocks. However, investing in mutual fund gives you more of stability, gives you more of diversification, but the return is usually not as much as what you can get, or the potential you can get when investing in stocks. So the ease, the stability, and the diversification when it comes to investing in mutual funds is what actually makes mutual fund very beginner friendly. For most beginners, mutual fund is usually a great start. Why? Because it offers you a form of diversification. It offers you the opportunity for you to get professional managers help you manage the fund, and also it can be quite easy for you to start with. And then you may also be wondering, so which one is actually better? Is it better to invest in stocks, or is it better to invest in mutual funds? Well, the response to this question is actually the fact that it all depends on you. It all depends on your choice. It all depends on your investment objectives. It all depends on your time horizon, and it also depends on your risk tolerance. So if you are someone that has the intention to invest for a long time, then investing in the stock market is actually something you may need to consider. Investments like stocks, like the equity mutual funds, can actually offer you great growth potential. But if the money is something that you need for a short time, or you need it within a particular period of time in the nearest future, then you can consider putting that fund into the money market fund. So now I want to hear from you. If you have 100,000 naira today, where would you rather put that money? Would you rather put the money into the stock market, or would you put it into mutual funds? So let me hear from you in the comment section. Just drop your comments and let me know which one you'd rather put your money into right now. Remember, the goal here is simple. Your money should not just sit idle. Your money should be working hard for you, as hard as you work for your money. And that brings us to the end of this video. Thank you very much for watching. Please don't forget to like this video. Don't forget to click that like button and press that notification bell. Don't forget to also subscribe. Thank you very much for watching, and catch up with you next time.